Now I'm going to welcome our last expert session, so with Incofin, with Noémie, Renier and Kapil Kanungo. So they will help us to understand how fund managers measure impact of climate adaptation and resilience building investments. So welcome on floor.
Good afternoon, ladies and gentlemen. First, it's a matter of great pleasure and privilege to be here today speaking to all of you. We know that we are the only ones keeping you from the coffee, so we'll try to make it short, and it's also post-lunch. Just a couple of words about Incofin and who we are. My name is Kapil Kanungo, and I'm joined by my colleague, Noémie Renier. Incofin is an impact investor. We're based in Belgium, but we have offices across Bogota, Nairobi, Phnom Penh, Chennai, and Delhi. We manage close to $1.4 billion in assets under management across private debt and private equity, across financial inclusion, agri-food value chains, and access to drinking water. Now, before I start this session, I just want to quickly recap a very powerful line that comes from the Nigerian author Chimamanda Ngozi Adichie. I'm a huge fan. In her TED talk on the danger of a single story, she says that the problem with stereotypes is not that they are not true, but that they often paint an incomplete picture of the reality, and that picture becomes the full reality in the reader's mind. It's quite profound, actually. And we see that happening a lot with the current discussions on climate finance, not in this room, thankfully, but in several such rooms in the global north. So the idea of today's talk is we want to talk about three things. We want to talk about how we are taking and how people can take a very holistic approach to climate finance. Two, we want to talk about how one can develop fit-for-purpose metrics to track climate impact. And three, we want to talk about how some of the solutions that we're looking at can be scaled and how climate finance can go from niche to mainstream. Now, coming back to Adichie's line on the danger of a single story, in many rooms in the global north, the discussion on climate finance today hinges on one central premise, which is how do we decarbonize the economy? Or in other words, how do we reduce carbon emissions? And what gets measured gets managed, as Peter Drucker said. A lot of climate finance activity today just focuses on measuring reduction of carbon emissions, which is important, but not enough. 93% of climate finance today goes into climate mitigation projects. Less than 7% goes into climate adaptation and resilience. That's a very high number. Let that sink in. It's 93%. Right? And there's no way anyone can justify that climate mitigation is that degree more important than climate adaptation and climate resilience, because many of the people we serve, or our end clients, come from vulnerable backgrounds in emerging markets, people who have effectively had not much contribution to making climate crisis a problem, but are actually at the forefront of bearing the costs of climate crisis, right? So the way we look at climate crisis is that we want to take a holistic approach to climate finance. It's not just about mitigation. It's as much a livelihoods challenge. It's as much a natural capital challenge. It's as much a food security challenge. It's a jobs challenge, and it's a social justice challenge. So that's the approach we take, and that's the approach that we would like all fund managers to take at a very philosophical, fundamental level, to think about climate finance as a holistic issue. And Carmen mentioned today in the morning about the intersection of gender and climate. And similarly, climate has intersectionality with several of the other social impact issues that we think about. Noémie, perhaps you can talk a little bit about the lessons from green bonds.
You can hear me? It works? Okay. The democratization of green bonds actually teaches quite a few lessons. Green bonds are not new. Green bonds were issued 15 years ago, 2008, but the main innovation today is that actually green bonds have been taken over also by private debt investors, but also private issuers. Why? Because they have been able to create a common language. When we speak about an energy efficiency project in Singapore, in Luxembourg, in New York, in all countries, we know what we are talking about. We have a taxonomies, a Bible or a dictionary that was referred to by Anna, I believe, that we can all refer to that helps us understand what is a green project. Such level of democratization, of standardization, comes also with some challenges, because standardization can inhibit innovation. And innovation is directly needed for climate adaptation and building resilience. It comes with additional financial challenge as well. Smaller issuers cannot access and they cannot afford the cost of green bonds. But coming back to the lack of innovation, the risk of lacking innovation. So when we look at the adaptation need in Bangladesh, in Tajikistan, or in Kyrgyzstan, from all the continents are very different. How can we capture all this adaptation and resilience need into the taxonomies? We have to be careful when building too rigid framework, because that may prevent also scaling the adoption of adaptation finance. We have several of our partner financial institutions that are reporting that actually they benefited from green bonds, but have not been able to actually deploy the green funding because the restriction of the eligibility criteria of the eligible green project. At the same time, if we develop too loosey frameworks, we risk to lose the trust of our investor, as we are all subject to the biggest risk is greenwashing from an investor perspective. So what we need is to keep in mind a fit-for-purpose approach that is inclusive and proportional. You may say, okay, it's nice, philosophically, we all agree, or not, with us, but how does it work in practice? We can share with you an example of one of our water access funds.
Yep. So thanks to some of our partners, we launched Water Access Acceleration Fund early this year. That's a fund that focuses on drinking water businesses, provides Series A private equity capital, and we're quite thankful to some of our investors that include the likes of Danone, DFC, Nordfund, IFU, BNP Paribas, and others. Now, when we were thinking about impact metrics for this fund, we took a three-pronged approach. The first approach was to look at social indicators, the second was to look at gender indicators, and third was to look at climate indicators. So on the social side, we look at BOP customers served or liters of drinking water provided and so on. On the gender front, I mean, water is a big gender issue because it's not the men in families that go out and fetch water or go walk 2 hours a day to get water, which is sometimes unclean. It's the women who have to do that. So we track very meticulously the number of women served and so on. And on the climate side, again, we look at three things. One, we look at philosophically if the company that we're investing in has a climate plan of action. And if they don't, then when we invest in them, we would enable them to make a climate plan within, say, a certain time period of our investment. On the mitigation side, we look at carbon emissions avoided sometimes, because oftentimes in the markets where some of our companies operate, people would use kerosene or firewood to boil water to clean it, so we're reducing emissions. Some of our companies also use carbon credits, so we look at the number of carbon credits earned. And then on the adaptation side, we look at water reuse, because the way you measure adaptation for the water sector is by looking at water use efficiency and water reuse. So those are the two metrics that we're using for water. Now, it's interesting that we've been able to do that in the water sector, but we also realize that there's a lot that needs to be done in other sectors, like agri-food, like health, like livelihoods. So, Noémie, how do you think we can do that for some of the other sectors?
I think we strongly believe that actually financial inclusion can play a big role, a significant role in scaling up climate adaptation and resilience. Like actually Piotr mentioned a bit earlier, equity can unlock projects. We believe that private debt can also allow for scaling. And so microfinance, there is a reason why we call microfinance very often the grandmother of impact. And we can learn a lot from the microfinance sector. First is a sustainable asset class that has built a network with the local communities, that has the expertise and also the trust from as a sustainable asset class. The microfinance sector has been able to build robust frameworks, systems, KPIs, and tools in order to assess, track social objective and impact. Also, over the last year, I have been working with many of you in the room on sharpening the gender lens investment into the impact tracking framework of microfinance. Now there is an urgent need in the microfinance sector, also to accelerate the development of a climate lens into microfinance. How do we do that at Incofin? There are 3 levels. At the due diligence level, we implement a deliberate climate lens together with a gender lens. On the field, when we meet with a client, with a microfinance institution and their loan officer, we try to understand the local reality and how climate change is affecting the end client. Secondly, we have tools, and the beauty is that there are already several tools that are existing today in order to assess the climate awareness of this institution. The social due diligence tool Alignus that is used in the financial inclusion sector incorporates already a strong environmental dimension that looks at dimension, for example, the intentionality of the institution, the system that has been built in place in order to assess climate risk locally, and also the offering of green microfinance. That's where it's become a bit more complicated, the offering of green microfinance. What is green? How many shades of green do we observe? We are partnering today, not only with our client, financial institutions, but also with external consultants. I saw online earlier Edera. Hello to Natalia as well. That is helping us also to build a better understanding on our portfolio and the portfolio of our microfinance institution about how green is their portfolio. We have also gladly welcomed the initiative of 60 Decibel about building a resilience index to understand feedback from the client, how the financial services may help them to build resilience to climate shock. So there are many ways to get more data, to have a better understanding of how financial service can help build adaptive capacity and resilience. And it's critical because failing to do so may just lead to climate discrimination in the financial inclusion sector. I look at the time as well. Okay. So in conclusion, how can we avoid climate discrimination in financial inclusion sector? We believe it's very important to adopt this holistic approach because investing in climate mitigation, adaptation, resilience are all mutually reinforcing. So we need to break the silos, first. Second, we need robust, fit-for-purpose framework and smart KPI that are adapted to the local realities of the market. It's not me here in Luxembourg or in Belgium or in France that will define what a small farmer needs in Bolivia. So we need to take that into account in the taxonomies that we develop. And the last point is also we strongly believe that microfinance can play a key role in scaling up adaptation and resilience. So maybe we have a few more minutes. We'd like to ensure that you do not leave this room with having sufficient stories of how clients of adaptation and climate resilience needs of our clients. But we don't want to leave you with one story, but maybe a few stories. Kapil, you want to start with one story?
Sure, we'll make it quick. This is the story of Vinod, who lives in a dusty, hot city in North India called Ghaziabad. It's a small city by Indian standards. It's a population of merely 1.4 million people. He drives a rickshaw, now an electric rickshaw. That's he received after getting a loan from one of our investees, Mufin Green. And when we spoke to him, we asked him, how does he feel about this electric rickshaw? And he had no idea about carbon emissions. He said this rickshaw is great because A, it's very cheap. B, the temperatures in summer here can get 40 to 45 degrees. And the seat, when you're sitting on a diesel rickshaw, can get quite hot. So this keeps me cool. So I'm very happy, and it doesn't make noise. So when you think of the rickshaw and electric rickshaw next time, it's not just mitigation. There are health co-benefits. There are other co-benefits that come along with it.
Another example is Vilma. Vilma is 40 years old. She has 2 kids. She lives in the south of La Paz. And the morning I met her, actually a few months ago, she had woken up at 2 a.m. in order to sell her carrots to the market. She was very proud that by 4 a.m. everything was gone already in the market. But Vilma, she had benefited from several loans from Banco FIE, a very gender-forward microfinance institution in Bolivia. And through the different loan cycle, she has been able to buy more land to build a greenhouse above her produce. of the last years, of course, many producers in Bolivia have suffered from late rains, frost, that has affected a lot of potato production. As a matter of fact, we could barely find potato when I was in Bolivia at that moment. And fortunately, Vilma, she could diversify her crop into carrots, lettuce, and various other crops, thanks to the loan that she received, and also technical assistance that she received, in order to stabilize her income, but also there were a lot of social co-benefits from this investment in climate adaptation. For Vilma, she was super proud to tell me that her son was going to university, and clearly I was inspired by meeting such an empowered woman.
If you want to hear the final story, you can catch us, because I know that it's already time. So we'll leave you to it, but thank you so much for your time and attention, and again, just a pleasure to be here. Thanks, ICFA.
Thank you, Noémie. So I would like to thank all the experts of today for sharing their knowledge, for sharing and improving our understanding of various topics about data and impact measurement. I think it's really precious. And this last expert session ends our plenary session for now.
Apply now.